Alex, let's go to some stock picks. Lewis is your pick. The trading update, what was it? 45 to 55% increase in HEPS. We've been talking about growth stocks this evening. Here is one of them.
Well, I won't say Lewis is a growth stock, but I think certainly some investors have missed perhaps what they were trying to do. So over the last 2 or 3 years, they've been investing a lot into the book. Mm-hmm. And that book is also repriced higher with interest rates going up. And that book is now yet to still give cash, which is still to come. So if you look at the balance sheet, also we've gone from a net cash position to, call it today, to the high end of the net debt position where I want to be. But this is now allowing them growth. I think earnings growth rate is going to be high for the next couple of years. And with cash earnings coming after that, and then they'll continue once again with their share buybacks and dividends after they've paid off some debt. And if you look at the last 5 or 6 years, the combined dividend and share buybacks, anything between, call it 15 to 20%. So they are giving back money to shareholders. There's some growth there. I think a lot of institutional investors haven't really covered Lewis, and I think they've been caught surprised. You can see the strong share price reaction over the last couple of years. And you only need 1 or 2 more of these investors to buy for Lewis to go to the next level. I think the business has substantially de-risked compared to where it was perhaps 10 years ago.
Yeah.
And no one knows more about furniture retail in South Africa than Johan Enslin. That's pretty much started there as a salesman all the year. He's the current CEO.
Yeah, absolutely. And the buybacks are just relentless. It's my favorite chart. The shares outstanding. It just goes down and down and down and down. Willem, stock pick for you?
I'm going to be picking Woolworths. They came up with a trading update this morning that was sort of very much in line and very well received. The main business there stays the food, which is top quality with incredible growth. I think you should look at Woolworths in terms of a sum of the parts. So they have one headache, which is Country Road Australia, and that's I don't think that's going away. And you should describe maybe a negative valuation or a zero valuation to that business. But the food business deserves a rating in line with something like a Boxer or a Checkers or a ShopRite, the listed ticker, in terms of valuation, along with the fashion, beauty and home. And if you look at the South African sort of market, the fashion and home are sort of interesting and difficult to value, but the beauty and home, but the fashion, you can link to something like a Truworths or Mr. Price, and the results have been picking up, and the exposure to the sort of we're all waiting for the growth to come through, but to the GNU and sort of the positive outlook is good. So I think the rating is justified. I think the update's good, and the share price isn't onerous. It's been a bit of a struggler, to be honest. It's not been the best, sort of part of your portfolio. And I think the case remains, which means the upside remains. And at the moment, like I said, the big conviction there is the strong food business that doesn't seem to stop growing in terms of stores and sort of like-for-like growth.
Yeah, and I take your point about the sort of the enthusiasm. We're all enthusiastic post the GNU. We're not yet quite spending. That's still to come through. That will come into the numbers. That's all for tonight's Stock Watch. Thanks to our guests, Willem Oldewage from Nitrogen Fund Managers, going with Woolies, Alex Duys, Umthombo Wealth, going with Lewis. Up next to close. Stay tuned.